Well, go on. Welcome back to my YouTube channel. My name is Dreycosting. What we do over here is to analyze the financial markets, chop it up in pieces, and just break it down so each and everyone can understand. All right. So today I'm gonna look at Capita PLC. Right. But before I go into Capita PLC, quick disclaimer. All right. Capita PLC is a company that is not really popular to the global markets, but I know it's popular to those over by London, right? So Capita is on the London Stock Exchange, and trust me, it's a company that I really love personally, right? So let me just give you a quick overview of what Capita does. So Capita is a consulting, digital service, and software business delivering innovative solution and simplifying the connection between businesses and customers, government, and citizens. Basically, what Capita does is like network, right? Computer networking. They're just a simple. They do computer networking. So they're like, if your company is not fully up to date with technology, right? They come in and they streamline your company to get it fully up to date with technology, to make your company like paperless, highly digital, and most of their customers is with the government, and they have a lot of large private companies as well. But just like everyone else, right? Just like everyone else. So let's look at what they're saying for the financials, right? Just like everyone else, Capita has been hit by Corona, right? So is it a good time now to buy Capita stock? Let's look into it, right? So this was Capita results as of June 2020. So what they're saying is that, in summary, they're saying that had a challenging 6 months, right? They don't see themselves recovering back to their regular position from COVID for at least 1 to 2 years. Wow, that's really bad. This COVID thing has been really bad for everyone. Why do you think this is so, right? Let's look at it. Capita, they depend on the government agencies, the private entities. If everyone is working from home, right? If the business are not running normally as they ought to their customers, then they don't have anyone to provide service to. So, which is what led to their revenue decreasing by 9%, right? They explained that it was the COVID impact. So, without a delay, let me go into their consolidated financial statements, right? Show you guys what's happening. Scrolling down. You guys can read all of these outlines. You could just go to the Capita website, right? I'm just going to go straight into the consolidated financial statement, right? All right, so before I reach to the consolidated financial statement, uh, each public report, normally speaks to the risks and uncertainties that they have within the company. And you guys could just take a quick glance of what Capita is saying right here. In a nutshell, they're just saying that they have been hit by COVID, and because of the fact that they have been hit by COVID, right, business is not really going well, all right? Simply put, right? All right. Consolidated income statement for Capita, yeah? So if you look in June 2020 compared to the prior year June, right? Revenue has decreased, right? The revenue has decreased from 1.8 to 1.6, right? That's not looking so good, right? Cost of sales, cost of sale Relatively the same, so that's not too bad. So they have managed to maintain their expense steadily, right? Let's look at the administrative expense, right? They have managed to reduce their administrative expense as well. That's a good sign as well. That's showing that management is trying their best as possible to really keep the company afloat, right? So as I said, just like I showed the delta the last time, um, uh, I was thinking about looking at Wells Fargo. It's the same thing. I mean, like all of the stock exchange, everyone is really getting a hit by this corona. And the truth is about it, we don't really know when the world economy as a whole is gonna really lift out of this recession. But let's continue, right? We lost. They have a loss right here. Loss before tax, 8.5. The profit the previous year, right? I have to give it up to Capita. It seems like they're still attributing, right, some form of earnings, right, to their shareholder. Is that the case? Let me go down. Let me go down in the financial statement and see if that's the case, right? All right. Let's look at the balance sheet because I love to look at the balance sheet. Property, plant, and equipment has decreased, right? So it's not just depreciation why it has decreased because I took a look. They had some disposal of property, plant, and equipment, and I'm going to get down to that in the financial statement. Intangible assets, uh, this has decreased. I don't like the sound of that. Goodwill, goodwill remain relatively the same. Rights of use of assets, right? So the rights of uses of assets is like back in the days we used to say we put in a rental expense, right? So the back in the days we just put rental expense within a financial statement, but the standard has changed. The leases, we have a new lease standard, and basically what that lease standard is saying is this: that the fact that you're getting economical benefits from the rental, right? They don't want it to push as expense anymore, right? They want it to be pushed as an asset because you're getting that economical benefit from it. So you're gonna have a right of use right here, then you're gonna have the liability being paid off at the end of the balance sheet, right? Let's go through. So that is what this right of use stands for. IFRS 16 leases, yeah, IFRS 16, correct? Yeah. What I'm seeing right here again is that they having another group held for sale. So basically what Capita is doing right now, they're disposing of some assets in order to get cash flow within the business. So that is what I'm reading from this balance sheet right here, is that they want to increase their cash flow because they're not getting it from the revenue like they ought because of the COVID. So those non-performing assets, they're actually trying to sell them. So one has been disposed of, and they're also holding another for sale. So for once you see that this L for sale right here, according to the standards, according to IFRS 5, L for sale, basically what this suggests is that the company has the intention, right, to sell this asset within the next 12 months. They're going to actively seek to locate a buyer, right? That's what they're doing. Cash flow right here. Don't like the fact that the cash has just increased like that. It should be Capital should try to put this excess cash into like the financial market, not just stocks, but probably other stuff that are moving, stuff like commodities, like the currency markets, or they should be trying to use this excessive cash to do something else to spend that money. But probably they're just trying to play it safe right now because they don't know what the future holds. So I don't know really what management is thinking right now. Why the reason why they're holding this so much cash compared to the prior year, right? So let's go through. Overall current liability has not increased that much. So they have been maintaining their liability in terms of the current liability under control. And let's look at the non-current liabilities. this is a wonderful job. I would say that this is a wonderful job by Capita, even though they are in financial restraint, right? Due to COVID, they have managed to at least monitor their debt properly. So this is just a slight increase compared to the prior year. So I must take my hat off the Capita management team, right? And this is my favorite figure, right? You guys must know by now, this is my favorite figure to look on within the financial statement is the underlying share capital. Those who own the underlying shares within the company. And as you realize that no one sold off their shares, no one. The same 34.5 as last year. So no one has sold off their shares. So the underlying investors are still believing in Capita. They're still holding out. And that is a really, really good sign, right? Same thing for the share premium, right? Underlying investors are holding their shares. They're not selling, and that's a very good sign. As I said, Capital is one of my favorite company in the entire world in terms of performance, and you should have really seen their performance before this COVID thing. It's a really dynamic company. It's a company that provides a great service. So if it wasn't for this COVID, trust me, their stock price will be still shooting down. So I'm going to get to the chart soon, right? So I'm just going through retained earnings, not looking too bad. They have been most really and truly. I must put my hat off to management. They have been really doing a good job in maintaining the the company the best way they can. Keeping it float above waters, right? Trying to keep the company as liquid as you can. That way, the company don't end up in a state where they have to just liquidate the entire company. But outside of the management, they're really doing a very, very good job, right? All right, let me go through, continuing going through. Where had this selling off? They bought some asset during the year. I know they disposed of some asset during the year. Let me scroll down through the notes and see what's going on. So this is the notes. I'm just giving a brief analysis. If you want more detailed analysis on Capita, just send me a DM on Instagram and I'll definitely go through it with you, all right? Going through, all right, so this was their disposal during 6-month period. All right, so they disposed of the Eclipse legal service. This is a gain on disposal of 42.1. Right, so that's not too bad. They're trying. This is the correct thing to do. If you have a non-performing asset, especially in COVID time, you just have to get rid of it, dispose it, and trying to preserve that cash flow. So that seems to be Capital's approach right now, disposing of assets, right? So they could get that cash flow in order to preserve the company. Right here they have the for sale again, right? All right, not too bad, not too bad. All right. So let's move on onto the chart and see what's going on with Capita. All right. So we're looking at Capita chart, right? So we're on the daily time frame, right? So let's look at this, right? So this was the key level, right? I like to use blue for my key levels. All right. This was a key level. So Capita was trading all the way at $180.51, right? Let me put it to the exact, right? Capita was trading all the way at 184.69. That's not too bad at all. Capita is a great company, right? They made a really severe low within Corona of $20, right? I'll call it $20, right? That was their severe low, right? So right here, all the way to December 19, Corona came. What happened after Corona came? Just like everybody else stock in the entire world, right? So right now the world is really in a devastating state in terms of the stock market, right? Really now in a recession. And trust me, right now the financial market, the best instruments to look at is either currencies, commodities. Right, so that's what I'm looking at right now in terms of the financial market. But in terms of the stock market, everywhere you turn, it's just not looking good. But let me continue. So this is Capita stock right here. So is it a good time to buy Capita stock? No, it's not a good time to buy Capita stock, right? Let's look at the basic of trading, right? So when it fall here, right? When it fall here, all right? Let's look at this, right? Man, so broke that trend, right? When it shifted, right? When it shifted and came back, right? Actually came back to this previous low right here. See that? Came back to this previous low right here. So it has not created a higher low, right? Which if it had created that higher low, right? Then now we could say that it is in an uptrend, because if it had higher highs and higher lows, then we know we had a definition for uptrend. So if this was a good time to buy, we should be seeing something like this. Impulse, retrace, impulse, retrace, impulse, retrace, right? We're getting higher lows, higher lows, higher lows, right? However, that is not the case, right? That is not the case. What happened was that it retraced and came back to this previous low right here. So it has not created a higher low yet. And according to Capita, they're saying that they don't see their company recovering until 2 years' time. So hopefully this stock can start rising soon. When is a good time to look at this stock? I would say let's wait until the next half yearly results, right? So they just gave us a half year result for June. Let's see what their results will look like when they release it somewhere about February, March, right? For their total annual result for the year, for this year ended December 2020. After that, we can come back again and assess capital to see if we can now start to go in the stock market. But right now, I would say that the stock market overall is just looking bad for the rest of 2020. So that's it. That's my take on capital, right? We just got to sit and wait. Right, so that's it. All right. Hope you guys learned something. And if you want to learn more in-depth stuff of how to analyze a financial statement, really going into the belly of it, right? With my 20 years plus of accounting and auditing experience, I'm definitely the person to share that knowledge with you. So if you're interested in personal mentorship, right, in the financial market, right, you could just follow me on Instagram, right, and just send me a DM, and I'll explain to you how you can become partner with me, right? If you're not on Instagram, it's not a problem. Just shoot me an email, right? And I'll reply back to you and tell you how you could get partner with me, right? Thanks for being here, guys. Hope this pandemic will end soon, that everyone can just recover and the entire world can recover, right? And go to full recovery. All right. So big up everyone.